Chairman Powell, sincerely, thank you for being here today. And first and foremost, I believe that the Fed must make sure that we have an economy that truly works for working families. I suspect you would agree. And the reality is that the tool of cooling the economy with interest hikes can push people out of jobs. We want to drive down inflation, of course, that makes sense. But we don't want to hurt working people to suffer. You know, how do you kind of square that together? Because it's quite a paradox.
So it's working people who are the most hurt by inflation. It is a bit of a paradox. I would agree. If you're living on
quite the paradox. Exactly, you're absolutely right.
It is. Yeah. No, so if you're living on a fixed income and you're spending every dollar on necessities of life, transportation, fuel, food, clothing, and inflation goes up, you're in trouble right away. You don't have a safety net. You're not a middle class or upper, wealthier person. So it is for those people that we need to get inflation under control. It is also the case, though, that the tool that we have, and we are the organization that's charged with price stability, is to cool off demand so that demand and supply get into better alignment over time. And we of course would love to do that in the current situation with as little effect on the labor market as we can. And there's much cooling that can take off in the labor market that doesn't involve higher unemployment. However, I can't guarantee that restoring price stability wouldn't have some implications of a higher unemployment, but you have to think that restoring price stability will pay benefits to everybody, especially low and moderate income people, for decades.
Yeah. Thank you. No, and I agree. It's just such a paradox because you have a dual mandate. And now we're going to kind of change the gears. There's clear that inflation over the last years have been many causes. It includes rampant corporate price gouging and monopolies. While Americans have gotten ripped off, executives and shareholders have raked in record profits. It's deeply immoral. I understand that it's not the policing price gouging and not in the Fed's direction, but you might look at smart ways to fight inflation. Is it fair to say that big business have been jacking up their prices and way more than their costs have increased? Is that accurate?
So I think what happened during the pandemic was supply was constricted. Cars is a great example. So the demand for cars went through the roof because people didn't want to take public transportation, and rates were very low. So demand was just very, very high, and we couldn't make cars. Literally, production of cars went down because there weren't enough semiconductors. I mean, I personally didn't realize that you needed a lot of semiconductors in a car, but now everybody knows that. So what happened was, how do you decide who gets the car? So the prices went up a lot. Car prices went up because when there's a lot of supply and a lot of demand and restricted supply, you get higher prices. As the economy returns to normal function and we have more semiconductors now, supply chains are getting better, what's happening is corporate profit margins are coming back down, as you would expect. And so that's just the way the economy is working.
So is it fair to say that you don't believe that price gouging wasn't a factor?
So I think that the collision between very strong demand and limited supply was a big factor, particularly as it relates to goods inflation. It's not much of a factor as it relates to housing services inflation or services inflation, which account for about 3/4 of inflation.
Okay. All right, thank you.
Thank you.
Ceding the time back to the chairman.
Thank you, Senator Fetterman.